All right, very good morning, Monday 25th of June. I hope everyone is well and enjoyed England's performance yesterday. A couple of cries of it's coming home from various people. I walked into the office this morning. I just would statistically like to remind you that you were playing Panama. So let's see how you get on against Belgium. Obviously, ever the believer of England am I. But yep, good performance. And obviously those caught the tennis, so yeah, much to come for the summer ahead with sport. But getting down to the financial markets, having a look at things in a tone this morning, I'd say we've got kind of a light risk off, if you like, tone to proceedings. Gold is negative though. It's kind of moved lower since the overnight session, but it has recovered a little bit over the last, I'd say, since really Europe's come into the market over the last hour and a half or so, come back to its S1. But otherwise, equities are lower, following a generally weaker performance overnight in the Asia-Pac session, and consequently fixed income futures higher. The US 10-year, it's a pretty decent move actually from an overnight session, up about 9.5 ticks at the moment, just above a 120 handle, and then Bunds also higher by about 40 ticks. So what we're going to do is what we did last Monday is we'll look at the kind of weekly calendar and then we'll try and tie in some of the associated news from what's happened over the weekend. But I guess one of the first things to mention overall is, not from a scheduled point of view, but still one of the most dominating factors for this week will undoubtedly be the ongoing trade war situation. So much as like what we said last week, it's probably going to remain the case that could be one of the biggest decisive factors as towards market sentiment, irrespective of the individual isolated events. But what are those events for this week, and how does the week as a whole look? And some of you may have seen me email this out to you guys first thing this morning, and really this is what I would encourage you guys to do. Kind of, I mean, for me, I do this on a Sunday night, but certainly first thing Monday morning is to help give you a better perspective of what the week might look like in terms of where the kind of balance of powers might come for more meaningful market movement. And so as we go through, just having a look here today, Monday's usually relatively quiet. As I said, a little of a response to some trade talk, which we'll get into in a second. But then you've got German IFO, typically seen as historically one of the more important indicators, kind of forward-looking, this being the actual companies in itself rather than the economists and analysts about their forward-looking perception of the economy. But I'd say this figure, although it has been weakening a touch of late in recent months, is still relatively high, but that will be something to look out for certainly in the next 20 minutes or so, so I'll try to wrap things up before then. But then otherwise for today it's pretty quiet. US home sales this afternoon, and there are a couple other non-economic data points that I put on this kind of brief overview of the calendar. You've got National Security Advisor John Bolton visiting the UK and Italy. That's due to be taking place over the today and next coming days, before then looking to facilitate a meeting in Russia, which would be obviously quite important given the developments at the moment with Putin and Trump. But there's no specific timings as yet. Something to be aware of throughout the week. Going through on Tuesday, US consumer confidence, API inventory, so again, pretty quiet in that respect. Actually, before we round off Monday, let me just quickly flick over to the daily calendar. One speaker to be aware of, and I haven't yet, I'll double check after the briefing what the specific time is, but you'll see here in the speaker section, you've got Bank of England Chief Economist Andy Haldane is speaking at a town hall meeting. Now, the reason why I'm bringing that to your attention is, of course, because of this. This is what we saw last week, when we had the pound spike higher on the back of Bank of England chief economist joining the hawk camp of McCafferty and Saunders. I think McCafferty is actually speaking, in fact, tomorrow as well. But it'll be interesting to see whether or not he kind of solidifies that more hawkish stance, or was that, as we were kind of maybe hypothesizing at the end of last week, was this a little bit of massaging a falling pound in order to mitigate then any renewed fears about that stoking inflation again, now that it's kind of leveled out fairly close back toward target. Just looking at cable here this morning on the chart, we've had a bit of a bounce from a fairly interesting technical point just on the short term in terms of the weekly levels. If we take into account then this was the big pop that we had on the Bank of England hawkish meeting, but pre that announcement the day before, that was the high, and then the subsequent low that we had, or excuse me, the low then the high at around in the futures, that 132.69. So the market has responded to that this morning, and I would say on the balance there hasn't really been too much in the way of real groundbreaking new UK related news. Things like 100,000 people march in the centre of London at the weekend for the right for a final or another referendum on the final Brexit deal. That's not going to have an impact on financial markets for the market open this morning. So more just noise than it is something of real influence for the prices today. But yeah, given the fact that there's kind of a lack of real, other than the trade war stuff, much going on for the pound or really the dollar at this point, until we get more detail on that trade stuff, then that level's holding for the moment. On a broader context, obviously cable has steadied out, and if the Bank of England's intention was to sound hawkish in order to mitigate this continued pressure that sterling had been under since really what was the mid-April high, then they've certainly done their job of stabilising some of that downside pressure, and we've kind of steadied out here. And on the current price, around that previous high we printed back in the coming towards this time from last year in 2017. But you'll know on the calendar, if we just quickly switch back to the calendar for a second, just let me move my charts over once more, transition. You'll see that on Thursday and Friday on this calendar here is when you get the EU Leaders Summit, and actually that continues into Friday, and it's Friday when they will be talking specifically about Brexit progression. But if you want my kind of insight as to this EU Summit, it was kind of being billed a few weeks ago as quite a big deal because it was, you know, how much they could have progressed on things like the customs union. But the point is that she's been too busy, Theresa May that is, trying to align her own government, that talks with Europe have not really progressed at all. So although this is an important meeting, I'd say at the end of the week and one to monitor, the actual outcome of it and what's going to be announced or achieved, I think is going to be net very little. Is that going to then, by as a net result, create weakness for the pound? I don't think so. I think if that were the case and the market had that view, they'd already be kind of shorting the pound on continued political, let's say, uncertainty, and that translating into then pressure of reducing timelines on the Brexit negotiation. I think the market's fairly comfortable with the state of play, and I don't think anything really of great matter is going to come out of that meeting at the end of the week. But it is happening, so you're aware. But as I said, Haldane is speaking later today, so keep an eye out for that, any sterling traders. Looking at Wednesday, durable goods, trade balance, pending home sales, and the DOE all inventories. So a couple of things to look out for, I guess, on the docket on Wednesday from an economic data point of view, very US-centric. I've also put in there, you do have then Bank of England's Carney and Polos. So if you think about the kind of this 3 days in the first half of the week for the pound, following on from what was quite a hawkish shock from the BOE, you've got Haldane, McCafferty and Carney all speaking one day after another. So the kind of new hawk, the always uber hawk, and then the governor, of course. So it could be quite interesting to see where we stand by the second half of the week as towards the market's view now, which is that we should see the next hike, which is priced at about 60% now for August. I've also noted in there, you've got Bank of Canada's Polos also speaking on Wednesday. Thursday, German retail sales, US GDP, weekly jobless, and that EU summit begins. But from a schedule point of view for data, Friday is where the kind of main bulk or cluster, if you like, of numbers worldwide comes out from overnight in Asia, with the Japanese IP, German employment change, UK GDP, Euro CPI from various nations, core PCE, Chicago PMI, and then you've got Draghi speaking as well. And then as a footnote, US Secretary of State is visiting North Korea, with the Defense Secretary also looking to visit China and South Korea. So not only to be looking out for trade war updates, you've also got to be just keep an awareness about you that you might see the foreign policy side of the US administration also come back to the forefront. Given John Bolton potentially in Russia in the latter part of the week, and then the Secretary of State and Defense Secretary within East Asia at the moment on a bit of a tour, are things to be aware of. Okay, a few things then from a headline news perspective that you should be aware of. And one is this. This is in Bloomberg this morning. China and Europe warn a trade war could trigger a global recession. So what was quite interesting and I think fairly expected was that you had renewed comments where the US were talking up tariffs on the automotive sector again against Europe on Friday. And this, of course, came as Europe's own tariffs kicked in and materialized in practice, if you like, against several US products. So I think the timing unsurprising. Whenever this tends to happen, Trump then tends to hit his Twitter account pretty hard in his own kind of verbal retaliation in that sense. But what we've had over the weekend is that China and Europe have vowed to oppose trade protectionism and unilateralism, saying that actions could push the world into recession, an apparent rebuke to the US. So for the moment, I guess China and Europe showing a fairly measured approach as towards obviously not wanting to be bullied by the Americans and retaliating to some effect. It is the Americans and Trump that remain on the offensive at this point. And with that being said, the one you need to look out for this week is the US Treasury is expected to release plans for fresh rules on Chinese investment in technology companies. And so the White House is said to use one of the most significant legal measures available to declare China's investment in US companies involved in technologies such as new energy vehicles, robotics and aerospace a threat to economic and national security, according to 8 people familiar with the plans that's being cited on Bloomberg this morning. So that's kind of the next area or type of headline that you're to look out for this week. And then, of course, on the back of that would be anything that comes in response from China in particular. One thing you may have read about China overnight was this. China to unleash $108 billion in reserve cut for some banks. So what's happened here is the Chinese central bank will cut the amount of cash some lenders hold as reserves, which is unlocking obviously a large amount of liquidity as it seeks to control leverage and support smaller companies. So some of this is to do with to help the economy, which has been showing some signs of slowing slightly and offsetting effects of a crackdown on their shadow banking system. But obviously some of this as well is a response to what the US are doing with their escalation of the trade war, and so China acting to free up, let's say, some of the liquidity for smaller firms which operate in their own economy. So this is the China cash reserve ratio for big banks. If you think of this as just the kind of the capital buffer in place in order to withstand an economic downturn, much like we had with the stress tests, really. If you think about it from the US, which all the US banks really passed with flying colours. I think it was apart from GS and MS, who were just above the cut. But what's happened here is, and I guess this on a 10-year chart for those who are not familiar with this particular kind of tool that the PBOC have, that if you think about here was the financial crisis. So as a net response, the central bank severely upped their capital reserve requirement ratios at the banks. So basically meaning that they'd keep more on their book in case of these negative downturns in the economy to weather that storm. And as the economy is generally improved, then they've lowered that down. But the lower this becomes, it does ease some of those capital burdens on some of these banks in that respect, kind of freeing up some of the available cash, if you like, and keeping rates lower on that side. And so that's what that is. Has that had any meaningful impact for price this morning? Well, no. This, I would say, is expected news and doesn't really come as any shock at all. So I'm just pointing it out to you to explain some of the reasoning behind the headlines. I think this is just absolutely as expected. Another thing you might have seen this morning, and this isn't really having much in the way of a market impact either, but just given several weeks ago it seemed like the market was having a bit of a wobble over emerging market uncertainty emanating from Turkey, where their currency was getting slammed at the time. Well, actually their currency has jumped over 2% this morning. So you've had an election, and a first of a series of key elections for the emerging markets, where Erdogan claimed a mandate to govern in Turkey. He had 53% of the presidential vote to 31% for his closest challenger. Now, is this a response then, a Turkish strength on the back of him specifically? Well, I'd probably say it's more to do with the fact that at least in the interim period there's some degree of political clarity in the fact that he now has won fairly convincing that election, which kind of eradicates what was the biggest uncertainty over their political future and leadership, which led to a big run on their local assets just a few weeks ago. So maybe a little bit of stabilization for the EM area can, again, kind of calm things, but if anything, just keeps the real sentiment driver back on the trade wars for the moment. One other thing then is OPEC. We had obviously a bit of a roller coaster ride, but in essence a really firm move to the upside in the wake of the OPEC meeting. So let's just have a quick look at oil, and to put into some perspective the size of the rally that we had on Friday through the confirmation of the OPEC meeting. You can see really when the Americans came in, and we got more clarity on what exactly was going to happen, and the overall outcome is that yes, non-OPEC, OPEC looking to increase production by up to 1 million, but the reality, of course, is that given some of the countries' lack of ability to increase production at all, the likes of Venezuela, Mexico, for example, means that the increase that will actually come into effect is far more smaller than that. So given the market was positioned in the weeks before for a sizable supply increase, what's actually happened here is going to be way smaller, and so we shot higher in the price, and we have gapped down a little bit this morning as I guess some of the just speculative tone to the move last week just dissipates slightly. Don't forget though, price is still elevated here, and I think quite rightly we've just come off a little bit from that run up to we got in the future side around 69.38 all the way up until the close of electronic trade last week, because the net response is, well, there is a bit of a supply increase coming in, but I guess for the moment then, for the week, you'd still remain favourable for probably looking for positions to want to re-enter the market, to stay long at this point. On an intraday, probably pivot would provide the first point of interest where that might come into play. But any more meaningful pullback down towards then, I guess the 67 handle, which would be then bringing in the S1 on the day, could be quite interesting as well for a pullback to then re-enter the market long, with the view that overall, given the demand situation, given what's happened with the OPEC decision, that the market should remain fairly comfortable at these levels which it's trading at the moment. Okay, so pretty much rounds off the briefing. As I said, wanted to just wrap it up in time for German IFO, which is coming up shortly. So just to recap on a couple of things. This morning there's been a minor risk-off tone to the open. Much of the kind of talking point is still around the potential for further escalations in the trade war. I'd suggest that that will still remain probably the most dominant theme for the trading week ahead. There is no set times really for a lot of the headlines in relation to that news, so it's something which I'd be certainly very wary of during the North American trading hours. So when we get towards kind of 11:30, 12 into the crossover, and then the US sessions is where you might get the bulk of the headline flow, and as a consequence then the general market activity, volume and direction. The best of the economic data, I'd say, probably comes on Friday, but you've got central bank speakers littered in throughout the week, as we've commented on, to also keep an eye out on. Okay, well that's it for the moment. What I'll do is I'll get Sam, if he's seen any good technical kind of setups, to share some charts in the chat room. Otherwise, I'm going to wish you a good day and a good week ahead. Okay, guys? Thank you very much.